Hello there, what's up? How are we doing today? So in our previous video, we talked about how to find organizations to invest in as a beginner. Now, this is a challenge most beginners actually go through when they want to start investing. They start looking for the stock to invest in, and sometimes they all make bad decisions. So we made that video to actually give you an indication on how to identify organizations to invest in. If you've not seen that video, click on the link and watch the video. It's very informative and it will help you a lot going forward as a beginner. Now, in that video, I also promised I was going to make a follow-up video, which is how to analyze this organization, how you can do your due diligence. This is why we're here today. This video is about analyzing this organization, making you see how to do due diligence, the key things you should look for in organizations. And I did promise I was going to show you an app I do use, so I'll do all that in this video. However, before I jump into this fully, I'll encourage you, if you're new to my channel, subscribe to my channel, hit that notification bell, and do smash the like button. Do not forget, share this video and let's help more people out there that are starting their investing journey. What do you look for in organizations before you actually invest in these organizations? The number one factor you should be looking out for is revenue. Yeah, revenue is number one, because a company that is not making money will go bust soon. You need to find out how they make money. How has their revenue been in the last 5 years, 3 years, whatever year you want to use as your indication? You need to find that out yourself. You need to find out, are they growing in revenue? 5 years ago, they made 1 million. 3 years ago, they've gone from 1 million to 5 million. You need to look at all this stuff for yourself. I do understand the last 2 years have been a critical year due to the pandemic. A whole lot of organizations making money actually did lose money because revenue dropped, sales dropped, businesses were shut down for a while. We do understand that. Sometimes you need to find out this thing. Why did they start losing money? What happened? Why did their money not grow? You need to put all this into perspective when analyzing an organization in terms of the revenue it does make. The second one will be the competitive nature of that organization in their industry. So you need to look at how strong are they to compete with their peers. Can they go head to head with their peers? Even if they cannot go head to head directly, how competitive are they in the particular industry? Let's look at the EVs, for example. Tesla is number one there. You also have the likes of NIO, Lucid Motors. So many people joining the EV play. Now you need to look at that industry as a whole. What's the market size of Tesla compared to NIO? Will NIO eat up more market size and close the gap with Tesla, for example? These are things you need to actually put into perspective. The competitive nature of that organization in relation to its peers in the same industry. Before you actually make an informed decision, before you make an investment decision, you need to put that into perspective. Now, the third one we'll be talking about is debt to equity ratio. You need to look at the debt of the organization. How indebted are they? You need to find out if they owe so much money and if they will go bust anytime soon. So many organizations owe money. I know some may not owe money, some are debt free. However, in one stage of their life, they actually did borrow money. So you need to look at their short-term assets as against their short-term liabilities, and you also need to look at their long-term asset as against their long-term liabilities. You need to put all this into perspective. You don't want to invest your money in organizations that may be struggling to actually pay their debt. We're looking at the case, the Chinese firm Evergrande. Now, this organization is struggling to actually pay debt, despite the fact that they've invested heavily across various sectors. So you need to actually make sure that you invest in an organization that will not go bust, that has the ability to pay off its debt for the business to still survive. So that is one thing you need to put into perspective. Now, the fourth on the list would be the PE ratio, which is price to earning ratio of the organization, basically. Now, this indicates what the share is actually selling for, the market price per share as against to earnings per share. You need to find this out yourself. This will give you an indication of the value of that share that you're actually investing in. Are you buying at the right value? Is it undervalued or overvalued, or are you in the fair value position? These are things you need to actually look out for yourself. So that's the fourth one. Now, the fifth one there we should be looking out for is how the organization treats dividend. Do they pay dividend? If they pay dividend, how do they handle their dividend? Is the organization that will pay $5 this year and then next year they pay $3? That's an indication that they are losing money. You want an organization that will pay 5 and go up the following year. So these are things you need to look out for, how they treat their dividend. Now, the next one on the list will be for you to look at the long-term stability of the organization and the sustainability of the business itself. Is it a business that will be in existence for 5 to 10 years? You need to put this in line with your goal. You find out, I'm going to invest in this organization for 5 years. Will this organization be in existence for 5 years before I leave my money there? So you need to put that into perspective. The long-term sustainability and stability of the organization. That is one thing you actually need to look out for as well. So the last on the list will be you looking at the executive members of the organization. Like, who is leading the organization? Is this person going to take the organization to the next level? We all know what it's like when you have good CEOs running the business and leading the organization to where it should be. Sometimes founders are the one leading the organization and taking it to the next level, just like Mark Zuckerberg. Jeff Bezos was the founder and the CEO for a long time until he left the position. Now we just see Jack Dorsey leaving Twitter and handing over to Parag, writing out that Parag will take the business to the next level. So we need to look at all those things and put them into perspective for us to actually gain the best out of our investment. So that's it here. That's the 7 key things you need to look out for when analyzing an organization. If you're new to my channel, I will encourage you, please hit that subscribe button, hit the like button. Also do share this video and help someone out there. Have yourself a wonderful day.